For the time being, let's focus on Vedanta. The numbers actually were good and the street is optimistic on the demerger. Let's check out what the management has to say. We're joined by Mr. Arun Misra, the Executive Director, and Mr. Ajay Goel, the Group CFO at Vedanta. Hi Ajay, good morning, as well as Mr. Misra. Thanks a lot for joining in. Let's focus first on your largest segment, that's the aluminium business. The EBITDA on a quarterly run rate has been holding around this 4,500 crores. Can you maintain it?
So if you look at from Vedanta's viewpoint, and of course, we got an home demand advantage. So aluminium in India growing at about 12-13%. And Vedanta is part of the global top decile cost curve. In that case, our margin remains intact, which is about $1,000 per ton. In that case, we do foresee that on every single quarterly basis, our EBITDA at aluminum business will be the same ballpark number, about 4,500 crores per quarter.
Interesting, Ajay. Then what kind of LME pricing are you working with on the aluminium business?
So if you look at maybe over the last 1 odd years, and the cycle of the pricing has remained strong. Again, it's driven by the global supply-demand dynamics. Now, coming to the current fiscal in the first month, given the whole tariff tussle, the pricing initially has taken a bit of hit in the first 2 weeks of April. But over the last 2 weeks, pricing is coming back. It is about now $2,500 per ton. Most consensus report shows the pricing will go back to almost $2,700 to $2,800 per ton.
Got it. All right. So that's about the aluminium business. Let's come across to you, Mr. Misra. What's the production uptake you're looking at in the oil and gas vertical? Because some on the street, they believe that's been a little bit disappointing. How do you scale up from here?
As of now, we finished at about 97,000 barrels of oil equivalent per day, and this will go up to 110, 115 with the current visibility that we have. And of course, we are working on more and more exploration to see whether we have more reserves available. We are working on the gas project in Barmer. We are working on the ASP project. I hope these things yield results so that next year end, we are able to share some better results.
All right. Ajay, let's come back to you. You all have deleveraged the balance sheet. Can you tell us how is the debt likely to evolve from here on, both on Vedanta Resources, which the street gets a little bit skeptical on what the promoter entity debt is at, and also the listed entity, which is Vedanta Limited?
Two areas we have been guiding the market. Firstly, for the parent company, Vedanta Resources, our debt from 9 billion 2.5 years ago has now come down to 5 billion. And the 5 billion is our decade low debt. From the current 5 billion, we'll go down to 3 billion over next 2 years. That's about the Vedanta's parent, Vedanta Resources. In Vedanta India being an operating entity, we look at net debt to EBITDA, the ratio of leverage. This number was 1.9x, which improved to 1.2x as we closed the last fiscal. And from 1.2x, we will go down to 1x, which means our EBITDA will be bigger than our debt. So both Vedanta Resources, the parent company, and Vedanta India, both will get deleveraged in near future as well.
Okay, all right. We'll be waiting to see how the demerged entity pans out. But given that you'll have focused on the cost side, and there has been some bit of volatility on the pricing side, that's LME pricing, could you give us a guidance on the EBITDA front?
Say last year, you may have seen our EBITDA has grown by almost 37%. And that is quite, it is our historical second best EBITDA. Now you'll appreciate in the current environment where pricing is slightly volatile, guiding the market on EBITDA will not be appropriate. Having said that, our guidance in today's earnings call, we have guiding the market that volume in the current year will be almost 10% higher versus last year. At the same time, cost and marketing premium will be 10% better off. And that would mean operationally, we are looking at 20% higher profitability in the current year vis-a-vis last year.
10% higher profitability in FY26 in comparison to FY25. Got that. The biggest query on the street is, what about the demerger? It's got delayed a little bit. When does the demerger see the light of day?
Well, you may have seen we have secured the approval of shareholders and the lenders in a meeting on 18th of Feb. And right now we are before the NCLT for the second motion petition. Demerger is absolutely on track, and we see demerger completing by September 30th.
Well, before we wind down on this conversation, let's come across to you, Mr. Misra. The street always gets a little bit skittish. What's on the promoter's mind next? Is there any plans to sell the steel business or any kind of rejig that you're looking at in the international businesses, say international zinc? What's the plan on both these two verticals?
So as of now, if you look at our steel business, we are totally focused on commissioning the 3 million ton expansion. And you are correct, safeguard duties are in. We should get the best out of the steel market in the current year possible. So that is our primary focus. Till the time the right valuation we get, because we believe that place has a potential of 10 million ton steel plant, and it should get reflected in the valuation if somebody is to offer. On the ZI plan, it's a part of the new vertical of the base metal business, inclusive of copper mine in Zambia and also the zinc business in South Africa. So there is no plan to rejig it with any of the Indian operations as of now.
Okay, see big potential for the steel business, looking at adding capacity. For the time being, the focus is on increasing capacity rather than selling it. Thanks a lot for joining in, gentlemen. Appreciate you speaking to us here on CNBC TV 18.